if you go back 20, 30 years, I don't want to give a housing loan to someone, but I believe. So in a way, real assets are generated for wealthy people, if you think about it.
As a retail investor, can I invest in real estate or participate in real estate with say even 100 rupees?
When you invest in a physical asset, most of the time today it is crossing 1 crore.
Welcome back to another episode of PropSutra with Balaji Rao. PropSutra is presented to you by Prop News Time. In this episode, we get into the financialization of real estate. We understand how technology has transformed the way we participate in the real estate market. Welcome back, sir.
Thank you.
So today I'd like to understand how technology is impacting the real estate from a financial perspective.
Yeah. See, what I believe real estate is going through, the metamorphosis it is going through, it is three-sided, in my opinion. We spoke sometime earlier about property as a service, which I call institutionalization of real estate.
Okay.
That means real estate will be held more and more by institutions.
Okay.
And they will provide the services along with real estate and make it a complete package deal.
Right.
Whether you want to buy or rent or use.
Okay.
Then we spoke also about digitization of real estate as to how digitization and digital technology is transforming real estate. Paperless, helping you make a decision, giving you security and safety features by way of RERA registration. The third aspect of it is what I would call financialization of real estate.
Okay.
Okay. Financialization of real estate, though sometimes can have a negative connotation, I'm looking at it positively out here. Real estate is a physical asset.
Okay.
Correct? Like
Yes.
gold or any other asset.
Yes.
You buy and sell it, you can use it, you can rent it, whatever it is. Financialization of real estate means that do you always have to buy a physical asset to enjoy its benefits?
Okay.
Okay?
Yes.
So what does that mean?
Yes.
Suppose I want to participate
Yes.
I believe real estate has a growth story.
Right.
Okay? I believe in this micro market or locality, real estate will do very well.
Yes.
Okay? So how do I participate in it?
Right.
The question comes, how do I participate? I think that Dwarka Expressway in NCR is the next hotspot. It'll do very well. So how do I participate?
Right.
So the usual method used to be I go and buy a flat there, an apartment there, with a good builder in a good project and wait for it to appreciate.
Correct.
In the meanwhile, I get rentals, which will give me a yield. But that ticket size of it is in crores.
Correct.
And I might not have crores to spend
Yes.
on an investment.
Right.
Okay. So is there any other way I will be thinking? Okay. It's just like people who believe the tech industry is doing well
Yes.
and will continue to do well, want to buy into the tech industry.
Right.
But he can't become a partner
Yes.
quickly into an Infosys or a Wipro or anything, Cognizant. Correct?
Yes.
So he goes and buys shares. That's his proxy.
Correct.
You understand?
Yes.
So you can buy one share also with a few thousand rupees, and that's his proxy. Now he's riding the tech wave.
Understood.
If the company does well because the tech industry is doing well, the company is doing well as a bellwether of the tech industry, then naturally he also does well as a shareholder.
Correct.
Okay? So that's the financialization of the tech industry. He's buying a financial share, an instrument.
Yeah.
Similarly, in real estate, with the advent of people who have come and started selling shares of their companies.
Yes.
Currently itself, there are about 199
Yes.
real estate companies, almost 200 companies.
Yeah.
And in this current boom of IPOs, there are quite a few real
Correct.
estate, hospitality, infrastructure companies coming in. So they have those companies who can do it. So I believe ABC developer who has a huge exposure in the Dwarka Expressway, I will buy his share.
Okay.
Okay?
Right.
So when the Dwarka Expressway prices do well, then the developer does well.
Right.
If the developer does well, I as a shareholder of the developer,
Right.
even if I'm holding 10 shares, I will do well.
Right.
So did I need to have 5 crores to invest in the property? No.
Right.
You understand?
Yeah.
So financialization comes in when I can take a financial instrument exposure
Yes.
rather than have to buy a physical asset, maintain it, keep it,
Yeah.
And the advantages of the financialization is, first and foremost, it's a lower ticket size, so it democratizes. It brings in more
Correct.
people.
Yes.
2, it'll have more liquidity because it's a low ticket I can buy and sell,
Right.
especially if it is listed.
Yes.
Okay? So
Yeah.
the risks are lower. I don't have to do so much due diligence.
Correct.
I don't need experts.
Right.
So it gives me far better flexibility, more liquidity, less risky,
Yes.
more number of participants.
Yeah.
So a financialization of an industry is an industry coming of age,
Okay.
where
Yes.
they think that millions of people want to participate
Right.
and they can do so through the financial instruments
Yeah.
rather than jump in to do the asset itself.
Right.
You understand? I don't want to give a housing loan to someone, but I believe housing loan industry is doing well.
Yes.
So can I buy into a housing finance company?
How can I do that? Okay. With
You
the
understand?
shares. Yeah.
So if that housing finance company is of scale and it lists on the bourses, I'll buy into it. No?
Right.
I don't have to go around figuring out how to do a housing finance.
Right.
And I can do it at a less ticket size.
Yes.
So the financialization of real estate has started in a big way. And I think it's about, it started around the mid 2000s. And it has come a long way in this last 20 years.
Right.
So today, you can buy equity shares
Yes.
if you want to just play the equity markets. And as I
Right.
said, there are 200 companies, out
Yes.
of which at least 20, 30 companies are well traded.
Yes.
You can buy what we can consider as category 2 AIFs under SEBI.
Right.
If you're a high net worth individual with a minimum ticket size of 1 crore, you can buy into funds which are very specific and thematic also.
Okay.
They'll say that we are giving credit to developers. We are lending to developers, or they might be taking an equity exposure to developers.
Right.
So these funds are well regulated by SEBI.
Okay.
They are usually guided by expert fund managers. So you can buy into an AIF Cat 2.
Okay.
You understand? So you can buy into that if you have a larger ticket size and an appetite
Right.
for a higher ticket this thing. There are a few mutual funds which have exposure to housing companies. You can buy into those mutual funds,
Right.
like Housing Opportunities Fund. So you can, and they will be having more exposure to housing companies.
Understood.
And the biggest thing which has come of age is the REITs and the InvITs,
Correct.
which are nothing but again units which hold through the company, through the trust, physical properties.
Right.
And they in turn will give you the rent. They'll pass it on as dividends, which are, so you can have REITs. There are already 4 REITs which are listed. There's a 5th on the way.
Yes.
Then you have InvITs,
Yes.
out of which there are quite a few which are not listed, but again 5 are listed.
Correct.
So you have these things where you can participate
Right.
in infrastructure or real estate or hospitality through these financial instruments.
Okay.
And you
Alright.
need not say that, look, because I'm bullish about real estate,
Yeah.
I think I have to go and buy real estate.
Understood.
Whether it's an office space or a shop or a residential unit.
Right.
This, in essence, is the core of financialization.
Okay. So what happens when somebody wants to, say, participate in a particular asset class? I feel, you said maybe I'm bullish on real estate, but specifically on warehousing, based on what I've read. Is there a way for me to invest as a retail investor, invest specifically in warehousing?
See, one is you can invest in a company which does warehousing. So you have to see in those inventory of companies that are listed, which has an exposure to warehousing. That's one way. 2, you can invest in a AIF. Again, it's a slightly higher ticket, which is focusing towards warehousing.
Right.
So there might be a warehousing fund
Yes.
which is available.
Yeah.
So then you will get into that warehousing fund. So these are the 2-3 various ways which you can approach warehousing.
You spoke about thematic funds earlier. Would you like to elaborate on that for our
See,
audience?
there are certain mutual funds which take an exposure on housing or allied industries.
Okay.
Okay, so they bring in the corpus of the mutual fund into investing in the shares of housing companies and allied industries, whether it's cement or paint or steel or anything, because they feel that if construction takes off, these companies will do well. So they are investing into the equities of those companies.
Okay.
So the theme is construction, real estate, infra. So that is the theme there. That's why it is thematic.
Okay, understood. Do we have any debt instruments or real estate debt instruments that one can
See, typically debt instruments, if you look at housing finance, is a debt instrument.
Okay.
So you can buy into the equity of housing finance companies because they are only giving debt.
Right.
They don't give equity.
Right.
One. Two, there's a refinancing of housing loans.
Okay.
Okay, which is called mortgage-backed securities, MBS.
Yes.
It became very famous during the global financial crash as having started it with
Correct.
subprime loans. But that's abroad. In India, we are pretty safe. So if you go into mortgage-backed securities, the first RMBS, residential mortgage-backed securities, was just done a little while back for LIC.
Yes,
and
in
it was
May.
well subscribed. But that's more institutional.
Okay.
Okay. But you will slowly get more and more mortgage-backed securities even into the retail market, I feel, in the years to come. Or you can also look at AIF category 2 because there are quite a few funds out there which are only oriented towards giving debt to developers.
Okay.
So they don't do equity to developers.
Okay.
They do debt to developers. That is, they give them loans at reasonably high rates of interest, get it back and distribute the same to you. So
Right.
you can also operate through them
Okay.
for that.
So now we understand that with this, it allows us to reduce the ticket size or how much we need to invest to participate in the real estate market. Can you give me a rough idea of what kind of figures I can look at? As a retail investor, can I invest in real estate or participate in real estate with say even 100 rupees?
Yes, if the real estate company share is less than 100, yes, you can.
Okay.
It might be difficult to sometimes buy one share, but we can
Right. Yeah.
to that extent, theoretically speaking.
Yes.
Practically, you'll need a few thousand. Even in a REIT, you have a limit of 15,000, so you have to practically have 15,000, which
Right.
is not a very large amount for an investor.
Correct.
So technically, you can invest even in the below 1 lakh category, if I can say so, in thousands.
Understood.
Okay. So there will be, you can invest in the thousands category. You can always invest in the lakhs category. As I said, the highest level is 1 crore in an AIF. So that, whereas when you invest in a physical asset, most of the time today it is crossing 1 crore.
Yes. Yeah.
Okay. So you can avoid investing in a physical asset because it has less liquidity, more risk. You'll have to do more due diligence. It's
Right.
not diversified, it's concentrated. So if you want to avoid all that, then you go into the financialization.
Okay.
So because you buy into companies, you buy into KIF, Cat 2s, So because that gives you a more diversified, and most importantly, you have somebody better looking after it. Okay, so if I buy into a good real estate company,
Right.
I'm also buying that the promoter is a guy who knows his business.
Correct.
He's going to bring this company up, and so my value will go up
Right.
in the company.
So you're betting not just on the product, but also on the people backing the product.
Correct. Promoters. You're betting on the fund manager in AIF Cat 2. So you're assuming they have expertise to help you out even in a sticky situation.
We haven't seen any residential REITs in India. Why do you think that is?
See, residential in India has a yield of 2 to 3% historically.
Right.
It's inching up slowly because most residential properties were dependent upon appreciation.
Right.
Appreciation would always be high for two reasons. One, inflation was higher in India.
Yes.
And two, demand always overtook supply.
Okay.
Supply was trailing.
Okay.
So whenever demand is higher than supply in a certain window, time gap, then you will realize the prices will move faster.
Right.
Correct?
Yes.
So it always was increasing. So for a typical residential investor, he was okay with 2 to 3% rental because he was confident the appreciation would be 7-8%.
Right.
So together it was working.
Correct.
Okay. On the commercial side, however, people didn't think much of appreciation.
Okay.
They felt it'll be 4-5%.
Okay.
And they were looking at rentals of 7-8%.
Okay.
Okay. So there was always that when somebody invests in a REIT, he wants also a steady income. He doesn't depend upon appreciation only.
Right.
Okay. So I think that time is going to come and is coming very fast.
Okay.
That is what I refer to institutionalization.
Yes.
See, now commercial properties, if you go back 20, 30 years, they were all what we call strata sale, fractional ownership.
Yes.
Everybody bought an office, and like a residential building, 30 offices formed a society.
Correct.
Correct? Today, you don't find commercial buildings with strata sale much. The majority is always under institutional ownership. Correct?
Yeah.
Either the developer or a REIT or a family office owns it.
Correct.
Similarly, in residential, this is going to happen, institutionalization.
Okay.
People will buy blocks of buildings,
Right.
turn it into hostels, turn it into co-living, turn it into assisted living.
Right.
So that sort of a thing, when it happens and it comes in with services, as I said, property as a service,
yes, like we spoke.
then your yield will also push up to 6-8%.
Right.
You understand? So then when you have a yield of 6-8%, like in commercial, with an appreciation of 4-5%, you're in the game. That REIT will happen. And that's approaching very fast. I believe in the next 3 years, you will see residential REITs.
I mean, in a way, if a builder has inventory that he's struggling to sell, he could maybe add services.
He
could
might
try
not
to...
be struggling to sell. This is another segment he can address.
Right.
I have built a large complex. Instead of making only one building for strata sale,
Yeah.
why won't I do 5? And they
Right.
say this can be student housing, or this
Yeah.
can be senior living, assisted living, and sell it to those institutions and operators who can operate it that way, give a higher yield.
Right. Of course, we're talking about this, but this is more possible in metro cities, right? Where the demand is higher. Or can this be applied even
See,
in
senior living is usually moves towards smaller cities, actually.
Okay.
If today Dehradun is turning out to be a good senior living center, for example,
Right.
okay, so why not there? Why does it have to be only in a tier 1?
Moving on, I want to talk about the risk aspect of such products. Now, at a basic level, yes, we understand that a real asset is safer than a paper asset. But can you elaborate a little bit more here?
A real asset has a sort of a emotional impact.
Okay.
That is why plotted land is doing well.
Right.
Because you want something solid to hold on to. Like if somebody saying, I hold on to a gold traded fund units,
Right.
vis-a-vis holding on to a gold biscuit or a
Right.
bar.
Yes.
Okay. So a real asset always gives you that comfort. It's like cash under your mattress.
Understood.
You understand?
Yeah.
That it's under your control. But naturally, when you have a real physical asset, the security, the safety increases. Correct? The maintenance, especially in a real estate sense. Okay. The due diligence you have to do before you buy it. So those are all associated with it. So in a way, real assets are generated for wealthy people, if you think about it.
Okay.
You understand? So if suppose you think of a painting,
Right.
an antique,
Yeah.
a vintage car,
Yes.
a rare wine, a coin collection, a statuette. So all these are only the preserve of the wealthy,
Yes.
because they have the due diligence, they have the network, they can safely provide for its safekeeping, maintenance, they insure it,
Yeah.
and they play that game.
Right.
Okay. So properties will also move towards that, the big properties. Okay. If it is a property you're buying for your own use, then it's just notional,
Correct.
the appreciation, because
Yes.
you can't sell it and be on the road.
Yes. Yeah.
But if you're buying it as an investment, what we're discussing, real
Yeah.
estate,
Yes.
then naturally you have to have the means to also maintain it, do your due diligence,
Right.
insure it, safekeep it.
Yes.
Then only you'll reap the benefits.
Correct.
So if you have the means, yes, by all means. But if you want to democratize that
Yes.
and say, I don't have the means, I have only 1 lakh and not 1 crore,
Yeah.
can I still participate in it? That's when financialization helps.
Right. In a way, there could be a perspective that if I'm holding a physical property, it might be harder for me to protect it vis-a-vis a paper asset because somebody else is taking care of it. There could be one POV.
Yes, that's what I said. It's cheaper.
Yeah.
Because it's dematerialized, you're paying some small charges to a depository, that's all. Because it's much cheaper.
Right.
Rather than try to hold that physical asset and maintain it. It's the preserve of the wealthy.
The financialization of real estate allows for price discovery. Do you agree with that?
Yes, of course. Because see, if it is a very few, they decide amongst themselves what that masterpiece painting should be.
Right.
You understand? If I tokenize it, it's a very different subject. But if I can tokenize it, and 1 million people now own that piece of painting, then price discovery is much better, no?
Right.
Because 1 million people are doing research to figure out what exactly should be the price of that.
But could you say it's research or maybe speculation?
See, whether it's speculation or research, speculation depends upon research, no?
Fair.
You can't be speculating on a toss of a coin. You're researching and speculating that this company will do better, no?
Fair.
In the coming years.
Correct.
You're not letting some parrot pick up some card. No?
Then, first, we all know that, again, paper assets are a lot more liquid than a physical asset. Is there any downside to this?
See, the downside to any liquidity is volatility, remember.
Okay.
See, that is the big thing. It's a very good point you pulled out because liquidity and volatility go on opposite sides.
Right.
If you're highly liquid, you'll be highly volatile.
Right.
If you're very less liquid, you're less volatile. A vintage car's worth is not going to go down so quickly
Right.
because nobody is trading it and suddenly you won't know whether it has come down.
Yes.
But a share, every day, every second it changes. So it's highly volatile.
Right.
So that's the biggest risk you run.
So to round up this episode, I'd like to ask you this question. Everybody says in a well-diversified portfolio, some amount of your money should be in real estate. So if I go by that belief, does it matter whether I put that money into a property or into paper assets?
I don't think it matters much. It will depend upon what the proportion is.
Okay.
If the proportion is worth in crores, then you might try physical property also
Okay.
to give you that safety. If it is in lakhs, you will try naturally paper assets. But you will diversify in order to see that you're covered all sectors.
Okay.
And real estate gives you that physical sector, what we call.
Right.
So I don't think there should be too much of a difference.
Okay.
So it's not necessarily it has to be a physical asset per se in the diversification.
Okay. All right. Thank you so much.
You're welcome.
That's a wrap for this week's episode. Thank you so much for tuning in. Don't forget to like, share, and subscribe, and hit the bell icon for regular notifications. Follow us on our social media handles and let us know if there's something you'd like to hear us talk about. Until next time, thank you so much.